Thank you everybody for being here today, and if you spent some time in this room, it means that you're interested in the uranium sector, which is great to see. We think there's a lot more coming to that space. So I know you've probably heard a lot about uranium. We had a great lunch yesterday with Mike and Guy talking about uranium, but I do want to spend a little bit of time talking about the broader market. I will make some forward-looking statements throughout this presentation, disclaimer here. But why we're doing what we're doing is because we need to make a pivot. We need to make a change to fuel a cleaner future. We've had a lot of countries around the world commit to getting to net zero by 2050. And as you can see by this graph, we just continue to use more and more energy as our nations develop, as bigger countries with bigger population bases move into a more affluent state. So right now we're fueling a lot of that, more than half, with coal and oil. And we need to really move away from that and lean into nuclear in a big way. And you need to have governments doing this, you need to have private enterprise doing this. And that's a big ship that takes a long time to turn. But the good news is over the last couple of years, we've started to see that happen and happen in a big way. And once it makes that turn, it only starts to speed up. So we've seen Japan, one of the first places to shut down nuclear reactors, turn them back on. We've seen them extend their lifespans. We've seen other countries like France extend the lifespan. We've seen China continue to build faster than any other country in the world right now. We had 28 or 22 countries at COP28 commit to tripling their nuclear capacity. We've had a world-renowned film producer in Oliver Stone put out a great documentary in support of nuclear, helping to change the public perception. We have the G7 countries want to stop fuel dependency on Russia. And most importantly, I want to spend a little bit of time here because this is where private enterprise can come in a very big way for nuclear. Right now, as you heard everybody talk about the WNA forecasts, that's all linear based on traditional nuclear reactors. If we have the big tech companies of the world that are building out giant AI data centers start to go to SMR technology, this is a demand in the uranium space that could hockey stick. And this is something that I think is being underpriced for the next several years in the uranium market. It's all about the big nuclear reactors being built right now, but big tech has huge cash piles to start to lean into this, and they want to be net zero. So this, I think, is going to be a very important thing to watch over the next couple of years. On top of that, right here at home, we had Ontario extending the life of our nuclear reactors. We just had South Korea bet big, over $3 billion on developing more SMR technology, and India starting to build 18 more nuclear reactors by 2032. So again, when this big ship has turned, there's going to be a lot of money coming into this sector in the next couple of years. Very important for us. However, uranium supply is still very constrained. So again, this graph shows that very linear big nuclear reactor build out without the potential of the SMR coming into the space. And it already shows a significant deficit for the uranium demand versus where supply is right now. So it's very imperative not to just have the developing projects come online, but for junior explorers, like you just saw in the previous couple of companies, be operating and be active in the space to find the next big deposits that the world needs to be able to continue to fuel a future that's going to be cleaner with uranium. And if you're going to be doing that, the best place to do it, the best real estate in the world is the Athabasca Basin, bar none, producing about 15% of the world's uranium right now, the highest grade deposits on anywhere in the world by a country mile. Very economic for a junior explorer to find a commodity deposit here. Huge potential. Obviously, we just saw Canalaska on Wednesday have a great intercept that had a significant move in their share price. So a lot can happen in the Athabasca Basin and a great place to explore. The team at Stallion has had a terrific track record of creating value for shareholders by being able to find huge deposits. So about 30% of my company is held by 3 shareholders. They put together Hathor, found the Rough Rider deposit and sold it to Rio Tinto for $650 million. They're significant shareholders of NextGen Energy after vending in some of the additional assets there. They also vended in the initial assets into Atha Energy, so another big player in the Athabasca Basin and now Thelon Basin as well. So again, a team that knows what they want to do and is the bedrock shareholders for us to go out and create significant amount of value in the next couple of years. We've done that by stepping into the Athabasca Basin in a very big way over 3,000 square kilometers. And as you can see on this map, very focused on the western side of the basin, or southwestern side of the Athabasca Basin. Actually, a couple of weeks ago, we did a transaction on our 3 projects on the east side. We deemed those as non-core. It was an area that we weren't focusing on. So we were able to get $400,000 in cash into the treasury for those, as well as owning about 10% of the new company that's going to take them forward and run the exploration efforts through the first year at the very least. So again, keeping those moving forward, keeping some upside, but again, focusing on our ground on the southwest Athabasca Basin. That's definitely our focus area. When we look at the basin, part of our strategy was, when the initial uranium exploration happened, it was up at the north side around Uranium City in the 50s, and then in the late 60s, early 70s, you found Key Lake and Rabbit Lake down on the east side, and all the exploration efforts shifted there in a very, very big way. A decade later, you found Cigar Lake and McArthur River, obviously the big monsters that are powering Cameco today. A decade ago, we had Triple R and the Arrow deposit by NextGen get discovered on the southwestern side of the basin. And if you've been following the uranium story, you know that was a terrible time to be finding a uranium discovery, with uranium prices falling off after Fukushima in 2011. So there was no follow-on exploration that came to the southwest side of the basin. But we think that's starting to resume now. Obviously, at the end of 2022, F3 with their ultra-high grade discovery brought some eyeballs back to the southwest. We have a significant amount of development coming to the southwest side of the basin. But again, our big strategy and feature is it's been underexplored. So we're looking at that 300 meter to 1,000 meter depth, stepping into the basin like they did when they moved from Key Lake to Cigar Lake and McArthur River into the basin, and looking for those deposit types that could be absolute monsters. So there's 5 deposits on the east side that hold over 1 billion pounds of uranium alone. We think that's sort of the untapped area on the southwest side of the basin. So Stallion's whole strategy has been to find that next significant deposit that can really move the needle on a global scale for uranium production. The western side of the basin is also going to see a lot of development. We're going to see over $1 billion of infrastructure come in with both NextGen and Fission moving forward with their development stories. If you listened to them yesterday, both moving those along through the permitting process, going to be very important for the western side. We're going to have a mill, at least one, that will come to the western side as well, greatly change the dynamics if we're able to find the deposit that we think is possible. So there's been over $6 billion worth of shareholder value created just in this southwest corner over the last decade. We think it's still the new burgeoning area of the economy, or of the southwest basin, that's going to drive the local economy and create a lot of value for us and our shareholders, because we do have the largest land package in this area with our 100% owned ground and our significant ATHA energy joint venture project, where we have 70% economics on that. ATHA has 30. So our whole roadmap was start really big, start with over 3,000 square kilometers, do the effective regional surveys over land that hasn't been explored for, find the conductive corridors, your target areas, have those target zones that you want to focus in further on, do additional surveys on the ground, get your drill targets, and then ultimately drill test to make that discovery. So that's a project map that we followed sort of in 2 tiers. One on our 100% owned ground, because we started that in early 2023, and then a little bit later on our joint venture project. But on our 100% owned ground, we were able to come up with 4 key target areas right away. The Appaloosa target, which is at the north end of our coffer project, was one that stood out to us right away. So we did a follow-up on the ground survey, a SQUID time domain survey on that, covering the entire target area, that just further increased our confidence to be able to go and drill test this. So this is a target area that has all the boxes checked that you want to see for uranium mineralization. It's a long and discrete conductor. It's got a gravity low. It's got a magnetic low, showing that alteration in the rock. And it's also right along a deep-seated geological structure, as it's the Beaver Lodge domain and the Tolston domain meeting right along that edge as well. And as you heard with both Pure Point and Standard Uranium, that big Clearwater domain, that's a later stage, big heat source to help mobilize the uranium, was just on the east side of this Appaloosa target as well. This area is very well endowed with uranium. Just 13 kilometers to the west is the Shea Creek deposit, owned by Uranium Energy Company and Orano. That's got 95 million pounds of uranium in it. So again, being able to have a significant deposit very nearby helps us with the confidence knowing that the area is well endowed, and then all the other boxes checked for the specific mineralization target that we want to be going after. So we've announced the mobilization of this drill program. It's going to be 3,300 meters through 3 holes, and we're going to have the drill start turning next week. So please stay tuned for that press release. It'll be a great time to have a drill start turning for Stallion. We also have a Gunter Lake project, 100% owned, again, Coyote target that is very prospective, will likely be the next target that's going to be drill ready for us. We covered it with our regional survey and actually recovered it with part of our ATHA joint venture survey that will be on the next slide. And we've just flown a gravity survey over it as well. So it's a little shallower target. It's about 350 meters to the unconformity. But again, we're looking at having this one be drill ready on the back of those surveys once we process and model that data as well. So again, having another drill target that's ready to go. But one of the big things that I think is easy to overlook when you're looking at the grand scale of what Stallion has done is we've taken ground that is very underexplored, and for the first time over most of this ground, put an effective survey in place. So this was a 2,200 square kilometer mobile MT survey, 2 helicopters in the air for almost 3 months, significant amount of ground, but it took what was unknown and underexplored ground and showed over 560 kilometers of conductive trends. So again, when you're looking at smaller projects, you know, anything that shows 5, 6, 7 kilometers of conductive trends is a great result. So to have over 560 kilometers, that's, you know, more than 100 times what would be expected to be a good result is absolutely incredible, and opened up what we're calling the new frontier of exploration in the Southwest. So again, being able to take an area that we think is up and coming, just like the eastern side was in the early 80s, and be able to own such a significant part of it and be able to prove out now, you can see these high colored areas are going to be key target areas that we're going to want to continue to follow up on. So not only are we at the advanced stage of drilling on our 100% owned projects, but being able to bring up new targets and have, you know, several 5, 6, 7, 8 tier 1 drill targets that have the potential of hosting a significant uranium mineralization deposit underneath it. So for us, we were able to expand this project further. Last week we announced staking of a new project that will cover over 31,000 hectares based on the data that we got from this. Again, because nobody has effectively covered this area, it's sort of in that bottom of the horseshoe area there that we staked, because nobody had the data to know that these new conductive corridors were there. So we were able to go out and stake open ground because it wasn't seen to be valuable at that time. And again, as we do the work to prove significant value on these projects, we're able to get out there and do that in front of other people. So creating another whole 31,000 hectare 100% owned project is a big win for Stallion. Again, this slide is just a quick realization of what can happen in the Athabasca Basin. The one thing I always like to rely on is Bill Gates's law, saying that everybody overestimates what you can do in 1 year and underestimates what you can do in 10 years. And I like to say that because NextGen Energy 10 years ago was an exploration company just like Stallion, just like Standard, just like PurePoint. And a decade later, they're a $5 billion company bringing a mine into development. So absolutely incredible what you can see and what can happen in the Athabasca Basin. But as we saw with some of our other peers, F3 Uranium, a project that's right along our coffer project, 1 drill hole moving them from 20 million to 150 million in 3 weeks. Canalaska's not on here. They're a little bit more focused in the eastern side. But again, another great drill hole yesterday, and just showing what can happen with your valuation as you hit a uranium target in the Athabasca Basin. Absolutely incredible results, and that's what we're doing. And we're doing it to find that next big deposit that we think is there. We have a little extra optionality in Stallion that I'll get into quickly. Stallion started as a gold company, so we have 2 projects. So our focus, time, and energy is in the Athabasca Basin. I'll reiterate that again. But we do have 2 great assets with gold prices near all-time highs and catalysts in both projects' neighborhoods. We think there's a lot of value to come to these projects. Perpetua Resources is going to be one of the largest independent open-pit gold mines in the United States, 6.5 million ounces of gold there. They've now received close to $60 million of Department of Defense funding for their antimony Our project also has a secondary target called Antimony Ridge that had antimony production during World War II. We think that's going to be a significant piece of information for moving Horse Heaven forward, but again, also has a very prospective gold zone that we've fully moved up to the permitting stage and is drill ready. And then in central Nevada, we have our Richmond Mountain project right next to I-80. Again, significant catalyst next door with a lot of exploration success from I-80. That made them buy Paycore Minerals last spring for 105 million Canadian. They've continued to find high-grade CRD deposits along with their gold, so that's zinc, lead, and silver. They've just announced that they're going to JV for their underground mining operations. They haven't announced that JV partner yet. We think it's going to be one of the major companies that will continue to move the needle for this district. So when it comes to exploration companies, a lot of it comes down to the people, as you've heard in this room over the last several presentations. Our VPX, Darren Slagowski, actually spent 7 years with PurePoint drilling these Spitfire deposits, so very familiar with the Southwest Athabasca Basin, knows how to operate in that area and make sure that our projects continue to move forward. Stephen Stanley was the CEO of Hathor, knows how to find a deposit and create a significant amount of shareholder value. He's on our board of advisors. A technical advisor is Matthew Schwab. He was employee number 3 at NextGen Energy, a significant piece of finding the Arrow deposit. And again, when you're looking for those big monsters, being able to have the brain power that's been there and done that goes a long way. He works hand in hand with Darren. Also on our board, we have Jay Martin, a key person in the resource space in Canada, puts on the Vancouver Resource Investment Conference, one of the larger investment conferences there. So again, a Rolodex that really helps us in the resource sector. Share structure right now, we're 123 million shares out, trading above 15 cents now, but we just did a life financing. So all of our shares are free trading. There is no hold up on anything, no hold period coming up. Everything's free trading, obviously, with the uranium sector pulling back. We've pulled back over the last month or so, but again, turning higher. I think we're 16.5 or 17 cents today and ready to march back in the right direction as the uranium market continues to get the momentum that it deserves. And about 36 million shares of that 123 is our key insiders and management. So again, a good base for us to move off of. Thank you.